Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today has been covering the precious metals market for 35 years, the man himself, Ted Butler of Butler Research. Welcome to Wall Street Silver, Ted.
Hey, thanks, Ivan and Jim. Glad to be here.
Pleasure.
So, Ted, you've been covering this. Ed Steer is always singing your praises to us, and thank you very much for coming on our channel. I wanted to ask your opinion right off the bat. We have this great chart here. I have it on the screen that Michael produces on Twitter. It's a combination of the COMEX and the LBMA data, and it shows really the trend of how silver has been gradually exiting the exchanges. You can see before Silversqueeze, and this was January 2021, just sort of no big change. Do you really notice this trend changing? And what do you think it's actually telling us?
It's telling. There's certainly can recognize it. You shouldn't have any problem in seeing that, and it's telling us that that silver is in a physical shortage state that is only intensifying, and not just this set of data, which is as clear as day, but everything else that you look at in the both the retail and the wholesale markets for silver are telling you that this is the tightest in terms of potential physical shortage, developing physical shortage that it's ever been. This is the tightest it's ever been in history. And not just this information that you're showing, which is very graphic, but every other thing that you look at in the world, the actual world of physical silver, be it retail or be it wholesale, it's never been tighter. The irony and the kick in the teeth about this is that according to the law of supply and demand, which is the fulcrum in our economic society, free markets, okay, should be indicating that prices should be soaring right now, not plumbing multi-year depths, okay? The irony that this connection between what you can see with your own eyes in the physical silver market every which way and what's going on in price is like makes no sense. The only thing that could possibly explain it, okay, explain it away, is not the physical data that you're going to show me because that's there. What's wrong is the price. There's something messing up the price, and we all know what it is. It's this paper positioning, this artificial and manipulative paper positioning on the COMEX by a handful of large paper traders that has so distorted the price, okay, that it's ridiculous. And you're doing the right thing. It's basically exposing this, getting people to buy physical silver, which they've been doing in droves, thanks to you guys. You've had more influence on this than anybody else that I can think of. Now the next step is to deal with the crooks, deal with the paper positioning on the COMEX, which is the only thing that's keeping this price and setting the price lower and lower.
Right.
And when we do that, okay, it launches to the heavens, period.
So we track the data at COMEX very closely at Wall Street Silver. There's a fella on Reddit named Ditch the Deep State, who Ed loves, by the way.
And so do I. So I follow him as well.
Nice.
Yeah. Well, he'll be happy to hear that, I'm sure. We track this data very closely. So the registered category was, back in January of 2021 was at 150 million registered ounces. And now it's down around 40 million. So it's fallen by almost 2/3. And as we understand it, that's the silver that's available for contract delivery in whatever the current month is. And the number of contracts, the leverage of paper contracts out there floating around is just insane relative to the small amount of silver that's available for delivery. Do you have a theory at what point this becomes a problem? Because that's the speculation on Reddit is it at 30 million ounces in the registered category it matters, or 20 million ounces? I mean, is there some lower limit where you think, oh my God, there's too much leverage of paper relative to physical? Or does none of this matter and everything in the eligible just makes it irrelevant? I mean, do you have any thoughts on that?
Well, I have a lot of thoughts on that, but I think basically people are, in the right direction, looking at the changes in physical inventory, along with other aspects of supply and demand. As far as anticipating the exact point, okay, at which it becomes an uncontrollable problem, I think we're very close to it. I think you can only answer with the benefit of hindsight. The day, okay, that silver explodes, and there will be a day when it explodes upward in price, I think fairly soon, okay, is the day that we can look back and say, okay, that was the day it reached the most critical portion, the situation it could get, and we're up from there. As far as predicting in advance that day, God, I've been predicting it for too long, okay,
Yeah.
to say what the day is going to be. But all these things add up to one thing. You got all this physical evidence of criticality. It's like it's never been this critical in the silver market before. No matter what statistic you look at, okay, the thing that you got to shake your head and make sure it's still screwed on right is that why is the price so low? And the price is so low, I repeat myself, because of this crooked paper position. You got the tail wagging the dog. Okay, this paper market is so big that it's distorting everything in the real world of physical supply and demand. And so therefore, look, we could go through, for days on end, everything about silver that is bullish, okay, from a physical supply demand point of view. You won't run out of things to talk about.
Right.
But there's only one thing that's keeping this price down, okay, and that's this crooked positioning on the COMEX by a handful of big traders that are positioning and trading more in paper silver than in physical silver exists. And it's just absolutely crazy. Again, it's the tail wagging the dog. And more than that, okay, it's illegal. It's against US commodity law that prices be artificially set in either a derivatives market or any outside interference from the actual law of supply and demand. And that's where I believe the main efforts at this point should be directed to get at the heart of the problem. This crooked COMEX paper dealings.
Yeah, like a lot of people believe that the COMEX numbers are manipulated and we're close to a breaking point. Do you believe they will change the rules once we get close to this breaking point, Ted?
Actually, no, and for the reason is that the COMEX, okay, the futures contract into delivery mechanism, along with the other big area for physical silver, the world silver ETFs like SLV, PSLV, SIVR. There's about 6 or 7 really big physical silver ETFs. The one thing that the ETFs and the COMEX have in common, and the one thing that gives them legitimacy, is the ability to convert either paper shares in the case of the ETFs, or in the case of the COMEX futures contracts, into physical delivery. It's that connection, that mechanism, okay, that gives both the COMEX and the ETFs their legitimacy. The minute anybody starts to mess with or try to negate this delivery mechanism, then all legitimacy will go out of either the COMEX or the ETFs, whatever. And I don't suspect that's going to happen, okay, because it will, basically destroy either the COMEX or the ETFs. And there's just too much big interest and money involved in this thing for that to happen.
Right.
Plus, there's another added feature now since the COMEX crooked manipulative paper positioning has basically featured over the last 6-8 months since the LME nickel default, by the way, has featured a massive short covering by the real crooks, the commercials, the banks, who have been buying back short positions and going long for the last 6 months, essentially. They happen to be now in the best position ever in the history of the COMEX, or in the history since I've been following it for 3 or 4 decades. They're in the best position of all of not being exposed
Really?
massively on the short side. And look, it's another way of saying they're not going to get hurt if the price of silver when the price of silver explodes, because they've anticipated it, and this is why they've been covering their short position. So they're as ready, I believe, as they could ever be for this upside liftoff in the price of silver.
Wow.
Anyway.
Yeah, so you touched on the nickel market, and I think the LME, which is not the LBMA, but it's more the base metals exchange, right? The London Metals Exchange. They lost a lot of credibility in that sort of, let's call it, scam they did, where they stopped trading for a week and they basically let that one big Chinese guy, the guy who was caught massively short, they basically let him survive. They almost manipulated the price back down because they wouldn't let people trade a certain way. They almost forced it back down. And I think I was reading that a lot of the investment banks that were hugely pissed off and at what happened. I don't know, the LME's lost a lot of credibility, especially the nickel market since then. So you might be right that the COMEX won't change the rules because they just saw how devastating that was to the nickel market's credibility after that happened. Is that sort of where you're going with that?
That's exactly where I'm going. In other words, what the LME did in nickel is what they basically messed with and tried to destroy that delivery mechanism, not enforce the delivery mechanism from paper to physical. And that's what's caused all the problems, and why the LME is never going to be the same as it once was. This lesson has not lost, okay, on those that run the COMEX. They could see quite clearly what's going to happen if they mess with the actual paper to physical or physical to paper delivery mechanism. And I think this was the prime influence, okay, that caused the wake-up call at the COMEX back on March the 8th. If you go back to March the 8th, the day of the LME nickel default, you'll see that gold that day was at its all-time high, $2,080 per ounce. Silver wasn't at its all-time high, but it was at its high for the year, $27.50 or so. And since that time, we've done nothing but go down in price. But the reason we've gone down in price is because all the big shorts, the commercial shorts in gold and silver on the COMEX, saw what happened on the LME and nickel on March the 8th, and they've been working their tails off ever since then to buy back as many shorts, okay, as they possibly can. And they've done it. The difference between the LME nickel and the COMEX is the LME nickel, they weren't prepared for it. It just happened, boom, okay? In this case, the real crooks on the COMEX took it as a wake-up call and did what they had to do: drive this price down, get all the idiot managed money technical funds to go short, so that the real commercial shorts, okay, who've been manipulating this market for 40 years, were able to buy back all their short positions and put them in position for the coming liftoff in prices.
You just wrote an article the other day that I want to share. And it's really been popular. We posted this on Reddit also for our community to see, but we wanted to talk to you about it. And you called this "Stand Up and Make a Difference." Here's the article on Silverseek. It's also on Reddit, and I'm going to put a link to this in the description of this video if people want to go to it. And Ted, walk people what you're trying to accomplish here.
Well, basically, it's like it's the biggest no-brainer in history. Okay, because look, we all know that the silver market is manipulated, gold as well, and we kind of know how they're doing it. It's a kind of complicated thing, but it's all centered on the COMEX, mostly 95% of it. And the crazy thing is that we have a federal regulator in the form of the Commodity Futures Trading Commission, the CFTC, whose primary mission, his purpose in life, is to basically prevent or root out price manipulation in the derivatives market, and at the same time, by doing that, to protect the public's interest. Okay. It's if airplanes were suddenly falling out of the sky, okay, we'd all turn to, among others, the federal regulator, the Federal Aviation Administration, to find out what the heck is going on. Same thing here. We happen to have a specific federal agency whose whole aim is to root out manipulation and protect the public, and they're not doing it. Okay, it's clear. We all know they're not doing it. Right. So when you have a situation like that, what can you do? Well, in this case, you can do an awful lot. You can take maybe a minute of your time, okay, copy and paste the letter that's posted there. The addresses where you send it to are all there. By the time you copy and paste and put in the email addresses for the commissioners, and hit the send button, if 60 seconds have gone by, it would be a lot. So maybe a minute's worth of your time. What will it accomplish? Well, potentially what it'll accomplish is this. First of all, we've never been in as tight a physical position as we are in silver, and to a lesser extent gold, okay, in history. And yet we have these super depressed prices. There's something wrong. We know what it is. It's the CFTC's job to do it. But in addition to that, 4 of the 5 commissioners are new. Okay, they've only been in office for 6 months or rough thereabouts. They happen to be all women too, which is fine, because generally I find that the women can be more reasonable than men at times. Anyway, there's good reason to believe. Look, I send them my articles in which I deal with the COMEX and manipulation and what the CFTC should be doing twice a week, okay, forever. But since these four new commissioners have been in office, but I don't know if they read it or not. I know I send it. I know I don't get an email rejection, so I know that they got it. Okay, but whether they read it or not, I don't know. There's a good chance they have a lot of things on their plate. They regulate a lot of markets, okay, that they may not be aware of this. This is a way, okay, of ensuring that they will be aware of it. And what they do after that is obviously up to them. Right. But by making them aware of it, putting the onus on them, this is what the public is concerned about, is important, because these are all political appointees. Okay, 2 Democrat, the new ones, 2 Democrat, 2 Republican, has nothing to do with party lines or anything like that. This is the most bipartisan issue or nonpartisan issue out there. Okay, doesn't make a difference what your political persuasion is. You know that silver's manipulated in price, and it's time to do something about it. And the last time this happened, there was an interview done by Chris Marcus with Bart Chilton a couple of years ago, just before he passed away, unfortunately and sadly. But he did back in 2009, a bunch of people wrote into the commission at that time, and about the bank participation report and how JP Morgan had this giant short position. Well, they investigated, okay, for about 5 years and was inconclusive. But if you listen to that interview with Bart Chilton, he told you that people wrote it. So many people wrote in that they had meetings. The CFTC had meetings about silver every day for about 6 months. I think it was hundreds of meetings they had. The same thing will happen here, okay? If enough people write in, look, you're just telling them to do their job. That's what they're there for, okay? They're
Right.
getting paid. They took an oath of office. Hey, time to do your job, but let them know. If you don't let them know, they're not going to look at it. They got other things to consider. This is something that can be done constructively, no cost, no risk, takes no time. It's like
Right.
perfect.
Well, Ted, that's a great summary. I encourage everyone to take take 60 seconds like Ted suggested, copy and paste the article. The link is in the description of this video. And we're going to pin it as probably the first comment, Ivan, if you'll do that for us.
Yes.
And copy and paste the suggested text of Ted's letter. Put your own name on it, maybe change a few words and make it your own words. Personalize it if you're so inspired. But Ted gave a very good format and a good outline to start with. If people want to use that and either send a hard copy letter or an email to the email addresses that Ted included in his article. And I think that's, hey, it's something we can all do, and it takes a minute or two of your time. And Ted, thank you very much. We appreciate you coming on our channel, and let's definitely do it again in the next 2 or 3 months.
Sure. Thank you. It's my pleasure. Thanks for having me on.
Thank you, Ted.